have a good friend to Benzinga. This is fun. I get to hang out with all my friends today. Gary Santo, president of Tilt Holdings. Ticker is TLLTF. What's happening, man?
Not much. How you been?
Not bad. Not bad. We're finally getting some spring weather here, so I appreciate it. But and things are going well with you. I see the hockey sticks still there, so we're
Hello.
well. Good, man. I'll let you jump right in. We'll talk Stanley Cup picks here in a minute.
Yeah, I mean, at some point, I guess with the spring coming, maybe I should change it to a bat, but I think that would suggest a different kind of business model. So we'll see.
There you go.
But no, thanks for having me this morning. I thought I'd spend the next 10, 15 minutes going through an abbreviated presentation. Our full corporate deck is available up on our website, www.tiltholdings.com. But hopefully we'll leave some time for some Q&A right afterwards. So jumping right in, for those of you who are new to the name Tilt Holdings, or maybe you knew us from a few months ago, we're sort of in the midst of our second act as a cannabis company. Not a lot of companies get a second act in business, certainly in the cannabis space. That is definitely true. When the company went public in 2018, I think it had a lot of aspirations similar to what the rest of the cannabis industry did, to become a lot of different things. And unfortunately, when you have that many different business models floating around at the same time, they tend to collide with each other and you don't get the most efficient use of capital. So, we have a very active board. They saw that strategy wasn't working. And in 2019, they reformed the management team and tapped into our current CEO, Mark Scatterday, who was the founder of the last company added to our portfolio. And he spent the next 15 months really stabilizing the base and returning the company profitability. I joined the firm in July of last year with a focus now on trying to determine our strategic path going forward. So we really are a different kind of multi-state operator. Yes, we do operate in more than one state, so obviously we fit the descriptor. However, unlike most of the other MSOs, we're not looking to compete on a retail basis. We're a little bit late to that game. Our bread and butter has always been on the ancillary services. Over half of our revenues come from our inhalation group, Jupiter, which produces the power supplies and the empty cartridges that are used in C-cell vaping technology. So what we sought to do with our plant touching assets was basically emulate that B2B model where we work with over 700 brands, and that includes MSOs, Canadian LPs, and just out and out independent brands. So as we look at our plant touching assets, we really have been about trying to figure out how to develop brands or partner with brands, more importantly, and bring them to supply constrained markets where we can be that extra 30% of the shelf space that most of the MSOs dedicate to curated portfolios of products that might not be their own, but help them round out their customer experience. So I think that's a very big differentiator and why we tend to track a little bit differently than folks that are putting up retail stores all over the place. In terms of where we see the market going, we really think that the next iteration of cannabis will be moving from the true vertical integration stage, which we call 2.0, into 3.0, where CPG and brands will start to take over. We've certainly seen this in California, where you've seen the wholesale market come down. There's tremendous competition there, but you've noticed that a number of brands have begun to distinguish themselves in certain niches, whether it's the high-end potency, whether it's quality, whether it's value brand. There's a slot for just about everybody. And I think the challenge is, to this point, there really have not been very many national brands created. Now, part of that's due to the regulatory structure, where obviously here, for example, in Massachusetts, where I sit, no matter how big you want to be, you only get three retail stores. So it's hard for you to build a brand in Massachusetts with 3 locations, especially when one of your competitors has 3 locations near you and they want to build their own brand. So it's a challenge to the industry, but it's one we're excited to lean into, because I think we have sort of that 3.0, that specialization across supply chain. Our ability to manage the manufacturing, the production, the distribution, and our ability to partner business to business, I think, is what separates us apart. So in terms of the brands, here's a list of brands, some of which we work with right now, some of which are a bit aspirational, but some of you probably recognize them depending where you might sit in the country. But really scaling that brand, as I mentioned, it is difficult. Others have gone and said that it could cost as much as $100 million to maintain a national brand. So for us, really, it's not about developing the brands and owning the brands ourselves, because that is such an expensive proposition. And it's also unclear which of the brands that are going to resonate nationwide. For us, we look more for developing partnerships. So working with brands that have a little bit more of a developed following, that understand how important brand architecture can be and how it might need to change as you move across the country. So if price and potency carries the day in California, there's a chance that might not be the sole selling factor here in Massachusetts. So those that have a very strong understanding of who they are and what really constitutes their brand and are willing to contemplate what that revised architecture might look like, those are our natural partners. And for us, it just allows us to leverage our distribution, where in Massachusetts, we sell into about 50% of the dispensaries. So we have 3 dispensaries of our own, but more importantly, we sell to 50% of that market. In Pennsylvania, where we have no dispensaries, we sell into about 95% of the market. So we do give brands an option to come across to the East, not be purchased, not be held captive to a very small retail footprint, but to basically be partnered up with someone who appreciates the quality, who wants to keep that brand fidelity, and who's ready to offer up our distribution network. So in talking about what the overall value proposition is to the companies out there, really comes in 4 flavors. And I think there's nothing really magical here. I think these are sort of obvious choices. But where it comes to the states that we're in, so we're in Pennsylvania, we're in Massachusetts, we're in Ohio, we can offer wholesale flower and consumer packaged goods. We can offer them with our own brand. We can offer them on a white label where you like one of our formulations and you put your label on that. Or we can work with you on a more bespoke basis where it's more contract manufacturing. Admittedly, it's probably not as exciting to us because we know that not all recipes work in all markets. So we're finding a lot more traction in that working together on a bespoke side than just taking someone's recipe and running with it. That leads to the other offering, product development. And that's really born out of our innovation and technology from our inhalation department, Jupiter. Our CEO, Mark Scatterday, was working in the tobacco industry, had come across C-Cell technology, which is owned by a company by the name of S'more out in China. And he was able to figure out a way to work with them and bring that ceramic technology into the cannabis vaping world. So that type of innovation and the products that we've developed from there have really given us an interesting line of sight about how important form factor, use cases, user interaction really is. And we've brought that into our plant touching as well. So as we think about our edibles or our tinctures or our salves and balms, and of course the quality of our flower, it's all informed by that same R&D data-driven process. We also offer hardware and packaging. We have partnerships that allow us, especially on the vaping side, to deliver a one-stop shop to our customers. So you get the battery, you get the empty cart, and you get the packaging you'll need to bring those forward. And of course, we do packaging amongst our flower as well. And then, as I talked about, the contract manufacturing. So it's really about delivering a turnkey opportunity. When we talk to a lot of the brands that have reached out to us, a lot of them talk about having to build significant infrastructure in the states they want to go in. Many have thought about buying licenses and entering those states. They talk about needing to have multiple salespeople on the ground and regulatory people on the ground and general managers. We offer expertise across that spectrum. So really all brands have to do and partners have to do is know your brand, make sure you can lean into the marketing and defending that brand, keep that brand fresh, keep it so that it's able to command the premium and or the position in the market that it's earned to this point, and we will take care of the rest. We'll help you distribute it. We'll handle the sales with you so that this way it keeps their overhead as low as possible and allows both companies to do what they do best. We'll handle the specialty supply chain and they can handle the marketing, and together we can share in the upside. So as I mentioned, we are in Massachusetts. We have a facility just over 100,000 square feet. A little over half that, about 56,000, is dedicated to flower. We just doubled that expansion. A year ago, we were at about 28,000 square feet. We added 14 grow rooms, which are now all online, and we're hoping to have harvests out of those rooms in the months to come. So we're pretty excited about what that means because we've been selling through all of our product on the wholesale basis as well as on the retail basis. We have a full commercial kitchen, extraction facility. We can produce over 30,000 package units per month with a number of demand-driven SKUs. We do have all of our dispensaries built out in Massachusetts. You had to be vertically integrated in the early days to get the licenses. Only one of those operations is open right now, our medical dispensary attached to our facility in Taunton. We are hopeful that in the next month or two, we should have resolution on our remaining license approvals for both our Brockton location, which is just down the road from our facility. That would be for medical and adult. We would add adult use in Taunton and then start with medical in Cambridge, right next to Boston. We have an award-winning kitchen. We've won Best Edible. And as I mentioned, we can offer a few different flavors of services, from contract manufacturing to white label to our own branded products, both on the vaporization side and on the plant side. Similarly, in Pennsylvania, we have about a 34,000 square foot facility. It is a greenhouse grow. There, obviously, the regulations are a little bit different, so we don't really have the kitchen, but we are prepared to put that kitchen in so that this way all of our facilities have the same capabilities once they're allowed over time. We were the second grower processor in Pennsylvania to sell products. Our Standard Farms brand is a top 3 brand, even though we don't have our own retail footprint. I think that speaks to the quality and the distribution. And we offer most of the same services that we do in Massachusetts. The newest addition is Ohio. Earlier this year, we took ownership of a manufacturing facility in Ohio, just under 10,000 square feet. It's brand new. It's got the same kitchen and processing capabilities as our Massachusetts shop, because the Ohio market, while still medical, does allow for a few more form factors than Pennsylvania. We're located easily to be able to reach all 52 dispensaries. So we really didn't put into our budget, or for that matter, our guidance to the street, anything coming out of Ohio, because we were not sure when we would take ownership, but we got it earlier than possible. So we're really excited to fire that operation up and start distributing out in the Ohio region in the next few months. On the Jupiter side, again, it's that disruptive inhalation technology I talked about earlier. Jupiter is the largest distributor of C-cell products. We have about 40 to 50% of the market. I think the next largest distributor is about 20-25%, so it's a pretty significant gap. We've had that first mover advantage, and in addition to just distributing, we also work together very closely with the factory, and we're building out a joint lab, actually, that allows us to do R&D. We handle their warranty and service work, so it's a much deeper relationship than just being a licensed distributor. It's something where we have our employees sit on the ground in China. We have some of S'more's employees sitting on the ground in Arizona, where Jupiter is based. So it's a very symbiotic relationship, and we look forward to a lot of innovation coming down the pipe, because I think people are seeing, coming out of COVID, that people who had gone from smoking vapes into smokable flower because the convenience factor wasn't critical, they want that flower experience. They want the fidelity. They want the taste. So it is time, I think, for vaping to start to migrate to the next thing. We're seeing it with live resin. I think there are plenty of places to go beyond that. This is an example of how we work with our partners. So the Curaleaf Select line does use Jupiter C-cell products. We're providing the battery, we provide the cartridge, we provide the packaging, we send that over to Curaleaf, who then provides the oil. So about 20% of our revenues right now come from customers who work both with our Jupiter products as well as with our plant touching products. And that cross-sell really has not been something we'd be focused on until recently. So it's almost by happenstance. And we look to leverage those relationships that much more and really get more efficiency out of the model. In terms of Jupiter itself, we did recently receive our ISO certification for medical quality management system. So in our labs in Arizona, we have the ability to work on medical quality products. We think that's going to be very important. We do have partnerships overseas with Cannabo, who has received medical certification for one of our proprietary devices in Israel and are pursuing the same certification in the EU. So it is a part of the business we're very heavily focused on. Our dose CTI products really lean into that concept of that metered dosage and trying to do more than just time delivered, but let's try to get the exact fidelity. Let's try to get the exact measured amount, so that this way those who use this as a medicine can actually get proper dosing. So in terms of where we came as a company, really, as I mentioned, 2019 into 2020 was about fixing the foundation of the company and getting back to profitability, shedding the business units that made no sense. So you can see for 2019, we went from just under -$1 million in adjusted EBITDA to just shy of 17 million EBITDA. So that's a pretty substantial jump. I think it speaks to the underlying quality of our business units. And honestly, as we were going through the stabilization, we were not truly investing in growth. So the goal was to come into 2021 ready to internally fund it. So when you look at the fact that we've been operating and funding our operations from cash flow from operations, not from borrowing or selling assets, you can see how strong the business model is. So we went from losing $17.5 million from our operating activities to generating $16.7 million. So in terms of our guidance, we put out that we hope to achieve 205 to 210 million in top line revenue in 2021, which would translate to about 30 to 32 million of positive EBITDA. What's important here is we do not need to build anything out. We do not need to invest in heavy M&A or CapEx. We are fully funded, and we are literally just sweating our assets and leaning into them and making them more efficient. So I'm already looking ahead to 2022 for growth opportunities because I feel incredibly comfortable about where we sit for 2021. So overall, you can see we are a different animal when it comes to being a multi-state operator. In terms of our plant touching assets, they are turnkey. They're able to do partnerships. We've launched with Her Highness as a test brand. We are in discussions with other brands to do exactly the same thing and bring them into our growing markets. Jupiter continues to be the backbone of inhalation, and we are positioned to not only internally fund growth, but really start to look at expanding into other multiple markets. So that is Tilt Holdings in a nutshell. I don't know if I left any time. Did I, Patrick?
You did. We have 2 minutes. 2 minutes, my friend. So one question I'm going to pose to you right away. Thank you, Victor. Gary seems to be really intertwined with the industry. Another Gary fan, man. I'm telling you, every time you come on here. Can we ask what his outlook for national legalization regulation is? Yeah, give us your 2 cents.
Sure. I mean, look, I think it's going to take time. There was a lot of excitement when the blue wave hit in the fall, and I think people had a little bit of an unrealistic expectation that we could all be listing on the NASDAQ or the NYSE by the end of this year. I think with the number of things that are trying to get done in Washington, this was going to get caught up in that mix. I also think that as we look at some of the legislation, it would behoove Washington if they could compartmentalize some of this. Let's focus on the Safe Banking Act first and get us on a normalized playing field. Because when you start to make these bills bigger and bigger, like you think about the MORE Act, it's much easier to find opposition the wider you make these bills. So I do think it's imminent. I think COVID proved that cannabis itself is a critical piece of people's everyday life, not just for episodic issues, but for medical issues. I think there needs to be a way to normalize and destigmatize. I think a lot's going to be thrown to the states to figure out. So even if they do deschedule, there will be a lot of time to work out with the states what it's going to look like. So will interstate commerce, how will that flow? So it's coming. There's no doubt it's coming. I just don't know if it'll be as fast as everybody would like it to be.
That's fair. That's fair. Thank you, Victor. I hope that answers your question. And thanks, Gary, for diving into that. Okay, so other than in our last couple minutes here, where people can reach you, let's talk just a second about the vaping industry, right? And how that's looking for you guys. I mean, obviously, we've seen big tobacco take a larger stake in the industry over the last, well, let's call it 6 months or so, with some of the investments made. A, do you think that has an impact on the vaping industry? And B, do you see that piece of the cannabis sector growing in the coming year?
I think BDS had indicated that they expect it to grow about 20-23%. I think in our projections, we're assuming we'll grow about 25 or north of 25%. Certainly, you couldn't have thrown more at vaping than you did a year and a half ago. You had the vaping crisis in 2019 and rolled right into a pandemic. But what we did see is for every percentage point vaping was down, smokable flower was up. So it's pretty clear that the consumers have said inhalation is their preferred absorption. So, I think the industry has been able to sit up, take notice. We were fortunate that most of the issues from vape crisis had to do with the illicit market. I think it speaks to, the regulations that are in place that make sure, each of these devices are being tested. As I mentioned earlier, I think there's an evolution that will be underway that sort of brings the concentrate vaporization and the flower together a little bit closer to sort of bring a unified experience in there. Big tobacco coming in, not a huge surprise. I mean, we always talked about how in a legalized world, grow probably gets commoditized by the big growers, and I'm sure big tobacco steps in on the vaping side of that. That said, I look at that cautiously because I think about some of the issues with nicotine vaping. Thank you for the PACT Act, tobacco. And I think they should tread carefully. This is medical as much as it is recreational. And I think they could be a welcome addition. It could be interesting capital coming in, but I think we all have to make sure we stay steady on what we're trying to achieve with the products we put out there. And let's not have bubblegum flavored vapes coming out anytime soon.
Yeah, I love that. Thank you. Okay, Gary, where can folks reach you?
Sure. So our website is www.tiltholdings.com. There you can sign up to get updates. You can certainly reach out directly to our IR contact and see the upcoming events and news that comes out.
Awesome, my friend. Always a pleasure. We'll see you again soon. Gary Santo, you guys, president of Tilt Holdings, TLLTF.
Thanks.
See you later, man.